welcome back. If you've been waiting for mortgage rates to come down before buying a home, well, this finally might be the window that you've been hoping for. As early August, mortgage rates dropped to the lowest level in the last 4 months. And while it's not a dramatic plunge, it's definitely a notable shift that could open up doors for buyers who have been feeling priced out. Now, I'll be honest, lower rates don't magically fix the housing market, but it can improve your buying power. And for some folks, this dip might be just enough to turn the tide. So in today's update, we're going to break down why the market rates are falling, what this means for affordability, and we're also going to run some numbers on a few real-world scenarios using the current national median home price. So by the end of this video, you're going to have a clear picture as far as whether this market shift makes sense for you and what kind of savings are actually on the table. And hey, if you're here trying to make sense of the market or stay on top of it, chances are others as well. So clicking on that like button, it really helps push this video out to more people who need it. It's quick for you, but makes a big difference for them and for us. So in advance, thank you for supporting this channel. That said, let's jump into it. Now, as of the first week of August 2025, the average 30-year fixed mortgage rate in the U.S. dropped to 6.63%. Now, that's down from 6.72% just a week earlier. Now, it's the third week in a row that rates have fallen. It marks the lowest point in the last 4 months, according to Freddie Mac. Now, to give you some context with that, at the same time last year, mortgage rates were around 6.47%. So we're slightly above that. And back in January 2025, we were dealing with rates above 7%, even hitting a peak of 7.04%. So yes, today's rate, it is lower, but it's not low by historic standards. So what's causing this recent drop? Well, there are three reasons for this. First off, you have mortgage rates tend to follow the 10-year Treasury yield. We spoke about this a few videos back, and that yield dipped early August. Why? Well, investors moved money bonds after a weaker than expected jobs report came out, which brings us to the second reason. The July jobs report showed a slowdown in new hiring. Now, this sparked concern that the economy might be cooling more than expected. So what do investors do when there's economic uncertainty? Well, they rush into the bond market, and that puts, as you guess it, downward pressure on the bond yields, which in turn pulls mortgage rates lower. Lastly, as we discussed in last week's video, the Federal Reserve recently decided to hold its key interest rate steady. Now, the Fed doesn't directly control mortgage rates, but their moves still influence overall interest rate environment. Bottom line is this: these three forces combine to bring some much needed relief to borrowers. So what does a drop in mortgage rates actually mean for home buyers? Well, it's simple: lower monthly payments. Now, let's run some numbers based on national median home price, which is currently $439,716 according to Redfin. We're going to look at two different scenarios here. One's going to be a 20% down payment, and the other is going to be the 3.5% down FHA loan. And let's fire it off with the conventional route at 20% down. At today's 6.63% rate, your monthly mortgage payment, excluding taxes and insurance, is going to be around $2,252. Last week, when rates were 6.72%, that same payment would have been $2,273. So this week's drop saves you about $21 per month, or a quarter tank of gas here in California. Not life-changing, right? But now compare that to the peak rate of 7.79% back in October 2023, and back then that same home would have cost you right around $2,528 per month. So by locking in today's rate, you're saving $276 per month, or over $3,300 a year. And here's the kicker with that. Over the life of a 30-year loan, that's a savings of nearly $99,400. Now, that's money you could be putting into renovations, investments, or saving for the future. Now, let's shift lanes and take a look at a more common entry point for first-time buyers: an FHA loan with 3.5% down. Again, today, that same $439,760 home would cost you around $2,717 per month, again, excluding tax and insurance. Last week, that number was closer to $2,742, so you're saving about $25 a month just from that latest dip. But again, the real difference shows when you compare it to October 2023, when the same loan would have cost you $3,050 per month. That's $333 monthly savings, or almost $4,000 a year. Stretch that out over the 30 years and you're saving about $120,000 compared to buying at peak mortgage rates. Now, before you get too excited, it's important to remember that lower interest alone doesn't solve affordability. Yeah, lower rates, does improve your buying power, but that doesn't erase the high home prices, rising property taxes, and insurance premiums that are hitting some regions really hard right now. Plus, if the rate drops too far, too fast, we might see a rush of buyers flood into the market again, which could, think about that. It's going to drive up home prices and create new competition. So it's a delicate balance. And here's the bottom line with this. Mortgage rates dropping to 6.63% it's a welcome shift, especially for buyers who have been waiting on the sidelines, watching affordability slip further and further out of reach. But let's keep things in perspective. This isn't a return of the sub 3% rates that we saw during the pandemic, and it's definitely not a signal that all the challenges in today's market, like the high home prices, limited inventory, or rising insurance costs, are suddenly going to go away. Now that said, even a small shift in rates can make a real difference in what can you afford and how far your budget can be stretched. So if you're thinking about buying, now is the time to have a conversation with a lender, crunch some numbers, and see if today's rate could impact the options that you have available. And as always, I'm going to keep you posted every step of the way. And friends, that's going to be it for today's video. If you found this helpful, go ahead and hit the like button, subscribe, and drop a comment down below. And hey, if you're in California and thinking about buying or selling, I'm a licensed agent and happy to help you walk through the process. With that said, friends, again, thanks for supporting the channel, thanks for watching, and I will see you in the next video.